Hello, welcome to GW Pro Trading. It's Gwen Michael here, and in this video, we're going to be discussing how and what to trade during risk on, risk off market mode. If you're new to this channel, I recommend that you subscribe and also smash on the notification bell on this channel so you'll be getting information whenever I post content such as this one. All right, so first, before I go ahead to define what is risk on and what is risk off. All right. Say you are a large guns, all right, and you have say $10,000 to invest, all right, and you have it that a certain group of investment, okay, is paying you 20%, all right, for or pay months, okay, for your investment, and this is risky, all right. If there is a situation in the economy or there's a situation, this company may either fold or may not be able to pay you your capital and also your profit. Thereby, you might as well lose your money. And a certain company or a certain establishment guarantees 1%, irrespective of whatever happens. You are going to get your money and also your investment. All right. So here are two different scenarios. All right. One pays 20% per month and one pays 1% per month. All right. And say during this time, everything is okay. All right. There is no war. All right. There is no crisis. There is no violence. All right. There is no pandemic. All right, everything is okay. All right. Every average person will want to invest here. All right. And will leave this to invest this, all right, on this because they will get more for their money. All right. Say there is a pandemic or there is a financial crisis, definitely you might want to take your money off here and then you might want to put your money here because this is guaranteed. Okay, so risk on is basically risk activated. So I would say risk on is risk activated, right? It means that the condition in the market is safe to invest in high yield assets. Okay, and risk off means the market condition is unsafe to invest in high yield asset. Okay, so you might want to take off some of your assets, all right, and then put them here where you can get guarantee or where you can get assurance that you're going to get back your money, all right, whenever you want them. All right. Okay, so we'll also go right to the next slide and then we'll see. Well, all right, so a lot of things could also cause market mode to change, all right, or could also cause a certain currency to be strong. Few of those are economic, natural, and also unexpected news could also be part of what could also make a currency to be strong or weak. All right, could also be the micro or the macro news. All right, but it all goes down to risk. All right, so the investors or large players look at this. All right, they look at this on a longer term. All right, so how do they feel? All right, so risk on is a function of the market mode or the condition in the market and also how the large players reflect, all right, on this. Okay. All right, so we look at a few currencies here we can then point out as risk on asset. All right. All right, so here we have the risk off and the risk on currencies. All right. In this video, we're going to be putting more of a focus on Forex. Okay, so we'll be looking more on the Forex aspect of risk market mode, all right, or the risk sentiments. All right, so either it's risk off and risk on how it affects the currency. Okay. First, we want to go ahead and see this chart here. All right. So these are the risk of currencies. All right. You have the USD, we have the JPY, and we also have the CHF. And these are the risk on currencies: the NZD, the AUD, and also the CAD. All right. Okay. So the CAD here is a commodity pay, which is Canadian dollar. All right. And Canadian dollar tends to move with crude oil price, right? Because Canada is also a major export of crude oil, and it is one of their major constituent, or it constitutes more as well to their GDP. So it tends to have a positive correlation with crude oil. All right, so you might want to ask why GBP and Euro is not here as part of risk on asset. By the end of this video, you will be able to identify why GBP and Euro is not part of this group of the risk on currencies. All right. What does it mean to say, or why does these currencies, or why do they call them a risk on currencies? All right. It all goes down to interest rate. This is what the interest rate looks like, and as of today, November 2020. So this video is made on the 9th of November 2021. All right, so here we have, these are the central bank's interest rate. So what are interest rate? Interest rate is what you get when you put your money on a deposit. All right, say you have $10,000 and you put it in a bank, you put it in a deposit. All right, and the bank pays you this interest rate when you put it in the bank. Okay, pays you this interest rate of 0.5%. Say pay annum or quarterly. All right, you can also have that quarterly. All right, but for the sake of this presentation, I'll say pay months. Okay, I would say pay months, and that also means buying securities. All right, bonds, that you're buying bond, TLT, treasuries. These government bonds are guaranteed of paying you back at the end of the stipulated period, plus your interest. Okay, now say you are a large money, or say you have a lot of money, and money you don't want to put into an investment. All right, you don't want to use. Okay, say you want to go deposit in the bank. Looking at all these various interest rates, or what the various banks are paying, we have the CHF, we have the JPY, the Euro, GBP, AUD, USD, CAD, NZD. Where will you likely put your money for a higher return? I'll put my money here on NZD. All right, say we have a very normal situation in the country or in the world, there is no crisis in New Zealand, I will put my money here and I will get 0.5% at the end of the month. So this explains interest rate. Who sets this interest rate? The banks. The banks sets the interest rate. All right. So how does the interest rate affect currencies? The higher the interest rate, the higher the currency. All right. Let me explain this. Interest rate, when interest rate goes up, bond price goes down. All right. This is vice versa. When interest rate goes up, we have the bond price coming down. Say you have a zero coupon bond that as at today, all right, let's say as at yesterday, interest rate here was 5%. You're going to be buying this bond that is going to pay you $1,000 at the end of the year or a period. 5% here, this bond pays you 5%. You're going to be paying $950 for a bond that is going to pay you $1,000 at the end of expiration. Say the interest rate goes up to 10%. Definitely, this bond price is going to become $900. It will be required of you to pay $900 for this bond because of the high interest rate. And you understand that this bond now requires you to pay $900 for a bond that will pay you $1,000 at maturity. So when the interest rate goes up, bond price comes down, yield goes up. Definitely there will be more people looking to buy this bond because they will find it more attractive. Let's say the interest rate drops. For a bond at 950, all right, let me just clear the whole of this. Bond that was sold at 950 at interest rate 5%. Let's say the interest rate goes down to 20%. All right. At maturity, this bond is supposed to pay $1,000. Interest rate goes down from 5%, say, to 1%. Let's say 1%. The next few days, this bond is going to be sold at $990. Interest rate goes down, bond price goes up. and vice versa. Yield goes down. All right, you can go read this up. Let's move on to the next slide. I just want to take a little time to explain that as well. All right. So in a situation whereby everything is going well, definitely investors will want to buy more of NZD government bond because they are expected to get more returns for their investment from NZD. Okay? The higher the returns, the higher the risk. So it's a higher the return, the higher the risk. Definitely, the lower the risk, the lower the return. All right? And in this presentation, here we have a low interest rate at minus 10%, and we also have the Swiss francs at minus 0.75%. This is more or less guaranteed, or you are guaranteed of your returns or your investment from this, but the returns is low compared to this with a higher return. So you have more of the large players putting their money on the NZD as well as the CAD. This is less than 0.25. So it could be 0.1, it could be 0.0, it could be anything, but definitely you can see that in all this shows less than from United States. That makes it could also be less than this, so it could also be here in terms of ranking. All right, and you can also see like players also buying more of the AUD as well, because that's the next on the ranking, or the GBP, or the Euro as well. All right, so that makes sense. All right, so in a risk off market mode, all right, say there is COVID, all right, during the COVID, you would see that more of the investors will want to buy either the Japanese government bond. Thereby, the currency or the Japanese yen will go up because of the demand of the Japanese government bond. And understand that if you're buying a Japanese government bond, definitely you will want to be buying the Japanese yen to be able to buy the Japanese government bond. All right? Does it make sense? Definitely, when there is great demand for yen, definitely we could expect that yen will go up. All right, price is a function of demand. All right, so we have the demand for yen in a risk of market mode. Definitely we can expect yen to go up, and we could expect that whoever or the large players that we're actually holding this will want to sell this, and this will go down. Also, this will also go down. AUD will go down as well. And this will go down, and there will be demand for this, and probably this. Understood? So in a risk on market mode, you have the NZD going up, yen going down, CHF going down. Definitely you want to find the NZD JPY going up in an uptrend. And you want to see also the AUD JPY going up. You want to also see this are neutral. GBP and Euro are neutral during the risk. They are neither risk on or risk off currencies. All right, I'll show you as we progress why these are neutral during risk on and also risk off. All right, so you can also have it that NZD, USD will also be going up. In this time, GBP, NZD will be going down. Make sense? Probably in this time, NZD CAD will be going up. Probably might just up, may actually be just flat. NZD, Euro NZD will also be going down. Euro AUD will also be going down. All right, so let's look at some of the indicators for risk on, risk off as well. During the risk on market mode, all right, these are some of the indicators for the risk on, risk off. All right, so you want to look at what other things are doing. All right, you want to look at other indicators as well. All right, so you want to look at what the VIX is doing, what is the stock market doing, okay, what's the bond doing, what's the yield doing. All right, so in risk on market mode, you want to be seeing the VIX going up. All right, that's an indication that it's risk on. All right, just got to mess up this. All right, so this is wrong. Okay, so you want to find VIX going down. All right, you want to find VIX going down in a risk on market mode. All right, you want to find stock going up. Also, bond will be going down, yield up, TLT down. In the risk of market mode, VIX will be going up. S&P, which is stock, will also be going down. The bond price will also be going up. The yield will be going down. And we also have that the TLT will also, the treasuries will also be going up. So these are very few things you want to look at. You wake up in the morning and you go over to your chart and you're having that the stock market is crashing, say dropping 50% or 20%. Definitely that is risk off. All right, so you don't want to be buying, you don't want to be taking AUD, USD long. You don't want to be doing that. Rather, you want to be taking AUD, USD short trade. All right, because flow of cash is flowing from the risk to less risk asset. And in this situation, the USD is the safe haven asset. Definitely, you can expect this to be strong during that time of the bond crashing. All right, and you can expect that the bond is going to go up. S&P, stock market, Dow, and everything, indices is going to go down. Are you going to find this down? So you want to be taking NZD, USD, short trade, AUD, USD, short trade, NZD, JPY, short trade, AUD, JPY, short trade, GBP, NZD, long trade. You want to do that? Now, GBP NZD is going to be short. All right? Because this is going to be stronger than this during that time. All right? NZD is the strongest during that time. You can expect that the GBP NZD is going to be weak. It's going to go down. All right? So let me just take some minutes off and then pause and then see if you're following. So Euro, AUD will be going with direction. All right, drop in the comment box if you got that right. This will be going down because of the AUD strength during this time. During this time, AUD is very strong. Okay? Okay, so let us go see a few examples of also what happened. All right. In 2007, we also had the financial crisis in 2007, which also started from December and then ended. It was recorded that it was ended on June 2009. All right, so this is the chart of the AUD and the VIX. Okay, so during this time, during the financial crisis or the Great Financial Depression you find that from this point, VIX started going up. All right, so this is VIX went up, and you can see that AUD went down. That is because AUD got weak, so it was more of risk off. And remember what we also said about when it's risk off, you want to see VIX going up. AUD went down. All right, so this is AUD, it dropped to the bottom. All right, after the crisis, we now saw that also gather momentum and then started moving to the upside. All right, similarly to this one, COVID was recorded first in December 2019. This also happened here. We also had that AUD dropped down, VIX went up. In 2020, about June, July, everything began to normalize, and then we started seeing AUD JPY move to the upside as well, also similar to what happened here. So we can expect some of those moves to also come in there as well. All right, so let's look at another few examples as well in order to be able to understand this. So this is also the chart of the NZD USD. During that time, you can also find that December 2007, this was the start of the crisis, and we also had it that NZD was selling off. Okay, so it was more of risk off. All right, that time you can see the strength, the drop. All right, very fast. All right, that time investors were getting off their risky asset. All right, they were selling off their risky asset and then moving to more safety. All right, so they were looking for safety, and then they bought more of JPY and also the USD, and that caused this drop. All right, so after everything fed out, that was resolved, and you can see that they started buying back those risky assets. And then we also had the NZD USD and also the NZD JPY as well continue to move to the upside, which also later dropped, but however they moved to the upside. All right, similarly with COVID, start of COVID, January, We also had that drop when everything normalized, started buying back risky asset. Make sense? All right, so we look at during this time, what was GBP doing? GBP and also the euro were more of neutral during this time. All right, this is also the chart of the AUD, as also it followed similar pattern with NZD dropped then moved up. Okay, so during this time, however, we could also find that GBP during this time followed the same pattern. All right, dropped then moved up. But however, against the boss of the day, what was it doing? It was going down. Let's go ahead and say that. Okay, this is the chart of the GBP AUD during that time, and we could see that they moved up because that time AUD moved down because of fear, and GBP AUD NZD as well moved up. Then after the toward the end, similarly, and then they now went down in that fashion. All right, so also similarly, what happened also with COVID, moved up then started dropping down, and we're going to continue dropping down because of AUD and NZD strength. All right, this also reflected on euro as well. So this is the chart of euro AUD and euro NZD. So this is euro NZD and euro AUD. You can see that this also happened here. We had price moved up because of that weakness that came in the market, and large players were selling off their risky asset and then moved to safety, and after everything normalized, and that started to drop. So which means that this AUD and also the NZD are the leaders. All right, so they are more of what the large players focus more on. So this euro and GBP follow what is happening. So the big guns, NZD, AUD, USD, JPY. During this time, I would call AUD, JPY a barometer pair. All right, if you want to know what is happening or what mode is the market right now, you want to go check NZD, JPY, because NZD has the highest interest rate. Okay, so if this is going up, definitely you can as well say that that is risk on market mode. If this is going down, this is risk of market mode, and you can expect that GBP and euro will follow same. This makes sense? So when you're looking at the Forex market as well, you can be able to identify what is happening. All right, by looking at these indicators. First, you want to be looking at the VIX. What is VIX doing? If VIX is going up, it's risk off. All right, if VIX is going up, it's risk off. All right, if VIX is going down, all right, sorry about this, I'm going to have to pen this. Then, if VIX is going down, it's risk on. If you have the stock market going up, you can't have the stock market crashing and you want to trade the NZD, USD long. No, you can't long NZD USD while the stock market is crashing. Definitely, this is a risk of market mode, and you can expect that you want to also sell. The large players are also selling risky asset, which is also in the person of NZD and also AUD. So this will be going down, and you can expect that GBP, AUD will be going up as a result of that, and also the GBP, NZD will also be going up as a result of that. I hope this makes sense. I hope this improves your trading. See you next time. And before I go, let me also share with you also what could also happen with CAD as well. You can see that during the pandemic or during the financial crisis, this is CAD. All right, this is NZD JPY, and this is NZD USD. So you can see that during the drop here, fear came in and selling the assets. USD CAD went up a little bit and then dropped back down. So you can see that this one then went up, this one then went down. Went separate ways. All right, we had this cross here. All right. So also what is also reflecting in the current market is also the AUD as well. You can see this cross. This letter went down, that letter went up because of the USD weakness and also the AUD strength. What is also happening in the current market? All right, COVID, separation, the cross. So this is expected to still continue a little bit, and this is still expected to continue a little bit. See you next time. Subscribe, like, and also share with friends. That's going to help in the creation of more educational videos. It's Gwyn Michael here as always. See you next time.